All right, what's going on, guys? Jeff here. Today's Tuesday. I just came back from work, so it's a little bit late. Hopefully, I can get this video out before market open. But anyway, let's cover some news today. All right, so we're going to go through this pretty quickly. All right, so Blackstone bets on campus housing with $13 billion acquisition. And honestly speaking, I do want to say this out loud first, which is, I think, in terms of investing, okay, a lot of people are really starting to not really invest in the market. People are worried about the market. People are thinking that, it's very hard for you guys to invest in the market because chances are, if you invested in the late 2021, chances are you probably are down about 60%, 70%, possibly even 80% and 90%. So, of course, it's going to be tough for people who are actually investing. But if you actually look at the market, if you look at a lot of the institutional investor, okay, you look at Blackstone. Okay, well, they're not BlackRock, but you look at Blackstone doing an acquisition, a $13 billion acquisition. You look at Warren Buffett with Berkshire Hathaway doing acquisition left and right. You look at Elon trying to do his own acquisition deal as well. You can really see that people are actually spending money because right now this is at the time where people are finding actual buying opportunities. So of course, back in 2021, late 2021, people are also, constantly saying buying the dip, myself included. But of course, the dip wasn't exactly the best dip. Of course, in hindsight, we can't really predict the future as such. But I do think that, right now is getting slightly better. I do see a lot more buying opportunity for better companies out there as well. Okay, so of course, if we're talking about Coinbase, which is the enigma of every investors or every finance channel out there who think that, because everyone thought that Coinbase was a good investment. Clearly, Coinbase actually went from $400 all the way down. Right now, it's at about $140 or so. And of course, with cryptocurrency tanking a little bit, crypto stocks is definitely going to be affected. I wish we also have the news for that later on. But anyway, I do think that, it is a overall better buying opportunity. Of course, we do have Goldman Sachs also coming up to say that the recession rating, aka the possibility, the percentage chance of us going into a recession, going up to 37%. Whereas the average for all the other banks, they're actually calling it at about 27% or so. So, of course, this is actually very, very worrying because a lot of people don't really understand that if a recession do hit, everyone is going to feel the brunt of it. Okay, it's not just going to be the investors. It's going to be the working class. It's going to be the middle class. Even the top 1%, all of them are going to feel the heat. The businesses are getting, destroyed. Of course, if you're talking about the top 1%, businesses will not get destroyed, but they will definitely be severely crippled, be it from supply chain issues, be it from demand slugging away and such. So, of course, I do think that there's going to be a lot of downside to a recession. And yeah, I do think that there is a very, very good chance that a recession might be just looming right ahead. But okay, anyway, let's move on to this, which is the betting on the housing campus. All right, so they actually did a acquisition deal for a $12.8 billion, including a bet that rents will continue to rise as more college students return to campus. So the rent collection in student housing remained high throughout the pandemic, despite the extended stretch in 2020, when many students attended classes remotely while spending time off campus. Now the sector looked poised to benefit from a number of tailwinds. There is relatively little student housing construction, which means that property owners face little new competition. So I do think that this is very, very interesting. That, honestly speaking, I don't think that it's an interesting deal for the campus housing side of things, but I do think that it's a very, very interesting acquisition to begin with. All right, next up, we've got Janet Yellen facing challenges to keep pressure on Russia while addressing global consequences. And let's be honest, when Janet Yellen comes up to talk, a lot of time, we start to talk about worries such as your national debt, your inflationary pressure, and of course with your whole geopolitical concern such as what's happening in Russia and Ukraine. All right, so how to balance a pressure campaign against Russia with a push to address a growing crisis like food insecurity will be a central test for Treasury Secretary Janet Yellen and other US officials as they meet this week with their global counterparts. So, expect Miss Yellen is expected to boycott some G20 meetings this week that includes Russian officials. And she last week warned countries against deepening their economic ties with Russia after the sanctions, singling out China. And of course, I'm not saying that, whatever she said brings forth a lot of power, but of course, Chinese economy is also getting a hit out of it, not only from geopolitical concern, but at the same time, they are also getting an increase in virality cases in China, be it your Shanghai, Beijing, and also Shenzhen. So all these cities inside of China is also getting a good beat up due to the whole lockdowns that's actually starting to come back again. So of course, that's going to be cause for a concern for the whole market in general as well. All right, so next up we have crypto stock performing worse than cryptocurrencies. And well, this is what I was talking before. Coinbase is off 42% so far this year as trading volume sinks. Silvergate Capital, Marathon Digital, and Riot Blockchain are down sharply as well. So I think about this time last year, or this time, or about 8 months ago or 10 months ago, I had a lot of my shares in Marathon Digital because it is a mining company, and I do like mining company back then. But of course, I did sell off when I realized that there were some headwinds coming against us. But of course, I do think of myself as more of a trader, more of a trader than an investor. But I do have my own investing portfolio rather than my trading portfolio. So of course, I do understand that when you actually look at it, Coinbase was horrible, but I actually made a profit from Coinbase at the end of the day. Right now, I don't have I still have another, I think, 30 shares of Coinbase, and the average price for those Coinbase at the moment is about like $80. Because I actually bought and sell. My average price for those 30 shares is about $80, I think, or $78 or so. So that's great. But of course, that 30 shares is inside my long-term hold. I only traded Coinbase a little bit because the moment I actually saw Coinbase having such huge movement in pricing, especially seeing how the price is actually being a lagging indicator to the Bitcoin prices as well. So I started to make some moves on Coinbase, and I decided to hold lesser of Coinbase and more into better companies. So yeah, for Coinbase wise, right now Coinbase, I'm not even sure how much is Coinbase at the moment. Let me see if I can find Coinbase. Let's see, Coin COIN. Let's see, Coinbase. Coinbase is currently at $147. Okay, $147. Honestly speaking, like I said before, it's still going to be, I'm still going to be profiting off Coinbase if I were to sell it now. But chances are I probably won't, because I do think that Coinbase at $80, which is my current average price, is too good to be true anyway. But of course, I could be wrong, and Coinbase could actually eventually go down to $40. I don't know. But of course, if we ever see a $40 Coinbase, I'm almost certain that I will actually be copying more Coinbase at that time as well. Because let's be honest, Coinbase currently is also a very, very well-known name in the crypto space. And if we're talking about crypto in general being completely wiped out, I really don't see Coinbase going that low. But of course, I could be wrong, because at some point I did say that Coinbase is an easy buy above $300 as well. So, we can easily be wrong as well. All right, anyway, next up, Netflix subscriber growth gets most attention even as revenue expected to jump. So, of course, we all already know of the most infamous Netflix earnings from last quarter, which basically made Netflix lose 26% market shares, which is actually quite crazy, because Netflix trading almost like a penny stock is very, very concerning for a stock that is worth $500 per share. Dropping 26% in just a day after earnings is very, very concerning. And of course, it actually dropped even more after the day after the earnings, which is even more concerning after that. So yeah, I do think that people are going to be taking a look at Netflix with a proper fine-tooth comb to actually see what's the issue with Netflix over the period of time for Netflix, which I think we'll be getting the earnings today. So I think that's going to be very, very interesting as well. All right, anyway, next up, let's see what do we have, which is a Fed's Bullard. James Bullard says 75 basis point hike could be the option if needed. All right, so Bullard said that, FOMC needs to move to the neutral rate expeditiously. Official known for hawkish view says recession talk is premature. Okay. The Federal Reserve Bank St. Louis president James Bullard said that the central bank needs to move quickly to raise interest rate to around 3.5% this year, with multiple half-point hike, and it shouldn't rule out the rate increase of 75 basis points. So of course, evidently, people seeing this kind of news, definitely going to have a little bit hit on the market. Okay, so honestly speaking, if right now you have not invested in the market at all, personally, if I'm in your shoes, I will not be investing right now. If I'm completely I have not touched the market at all, I'm not going to be getting in now. But if you have already been invested in the market for all this time and you're down like, I don't know, 40, 50, 60, 80%, start hedging a little bit. Okay, if you do have a little bit of money, start hedging a little bit. Start selling a little bit and kind of waiting it out. Of course, this is timing the market, but you have to also take into consideration that the amount of headwinds coming our way is a lot more than tailwinds. And if that's the case, it's very hard for you to really hedge your position when you actually go into recession. Because when you actually go into recession, that's when people start to buy. Okay, if something that 2020 have taught me is that people should not fumble a good buying opportunity. Okay, when COVID struck, first time, 19th of March 2020, when that first hit, everyone was going crazy. Okay, prices of everything went down, indexes went down by 20%, 30%. It was crazy. But afterwards, it was a very, very quick V-shaped recovery for the whole entire recession. Well, mini recession. And because of that, I do think that, don't fumble a good buying opportunity. And because of that, it's better for you to actually start to hedge your position a little bit, get a little bit of resources on your end. And of course, if you do start to see a proper buying opportunity, start buying them. But, that's just my own point of view, not financial advice. But anyway, more than 50 basis points is not my base case at this point, which is crazy, okay? Because first of all, we do understand that James Bullard is someone who is very, very hawkish rather than dovish, and he have always been saying that it's better for him, the anti-Federal Reserve to actually try to increase the basis point hike, so that we can actually hit a higher interest rate for us to actually curb off the current hyperinflationary trend at the moment, which I don't 100% disagree with him. So over here, I wouldn't rule it out, but it's not my base case here. For the 50%, the 50 basis point increase is possible at even May 3rd to 4th meeting. So like I said before, okay, if in this May 3rd and May 4th meeting, if we suddenly see, I don't know, if the FOMC say that it is going to be 25 basis point increment, I can assure you that the market is going to rally. Okay, the market is going to rally if it's a 25 basis point increment. However, if we do see anything above 50 basis point, you see 50, you see 75, you see 100, I would like to think that there will be a lot of panic in the market, and that might actually be the first domino piece to really set off a mini recession. So of course, that is something that we can actually try to look out for, something that you have to be a little bit more worried about. Personally, my own play would most likely be to sell calls before the meeting, just so that I can just hedge against myself a little bit. If anything, I just buy back those calls. If I really lose out on it, I wouldn't mind losing a few $100 just to make sure that I actually hedge my stocks against before it actually happens. Because a 50 basis point hike, 75 basis point hike, 100 basis point hike is not completely impossible, especially when we saw 8.5% year-over-year inflationary data for the month of March. And as much as I do think that this is not super duper scary for us, but you also have to take into consideration from a macro sense of point of view. People are not just looking at core inflation; people are looking at inflationary data as a whole. All right. So anyway, let's move on. I do not want to make this a very, very long. Sorry. All right. Apollo considers backing Elon Musk. Other suitors for Twitter bid. All right, so Apollo Global Management is interested in helping finance a bid for Twitter, following Elon Musk's $43 billion unsolicited offer to take the company private. Apollo is considering backing a potential deal for Twitter and could provide Musk or another bidder, like private equity firm Thoma Bravo LP, with equity or debt to support an offer. Okay, so of course, this is just them coming out to just say that we are going to be supporting whoever who want to take over Twitter. We are willing to do it. Kind of like a little bit like a marketing kind of stunt. So pretty cool. All right, next up, U.S. stock sees biggest outflow of year as recession fears bite. So, as I said before, chances are people are really starting to siphon their money out of the economy. And that's kind of how you see economy kind of having a rise and kind of have a fall, kind of just stabilizing and finding its own ground. Okay, that's how you actually find supports and resistant lines. But of course, the outflows have actually been going more than the inflows for the money in the US equity funds in general, right? The outflows have been $15.5 billion in a week through April 13. Okay, this is just in a week. So you can kind of understand how much money is actually being taken away from the US market, and that's going to be seen as very, very concerning. So, of course, I don't want to say that money printing is going to be happening, but of course, that is also on the table, I would assume. So, yeah, we have to really see what's going to be happening. All right, anyway, last news that we have over here, which is investor turned cautious on a Chinese stock amid growth concerns. While the first quarter ended with more than $20 billion in net inflows to mainland Chinese stocks, the bulk occurred in January, and the pace of buying dropped sharply as the quarter progressed. Data from EPFR Global show. Anything that relates to China, we can find in causality and reasoning from either Russia or the US right now, said Stephen Chen. There's been sizable outflows from China equities since last year, reflecting a notable de-risking on China. So, of course, if you're talking about de-risking of China, I really don't think that we are actually that risk-off in China either. Okay, we're not that risk-on in China either. If anything, we're risk-off in China because, of course, especially with Didi going through the whole delisting situation, we also have regulation still ongoing, geopolitical tension. We still have high COVID cases. I don't think that China is exactly the best time for you to really get into right now. But of course, things could change in the next few months. Okay, and that might be a good buying opportunity. And we could have just missed on this great buying opportunity for Chinese stocks. But personally, I do think that right now, good news is very, very hard to come by. And if we are buying on bad news is not really in the lack of supply. So if that's the case, there will always be buying opportunity. I'm not that worried. I don't think that there is this rocket ship that is going to the moon and they are going to leave anyone behind. Because if anything, we're just going to have a stable increment. It's not going to be something so crazy parabolic like back in what we had in the late 2020s, where people just basically had a huge recovery from the pandemic-stricken market. But anyway, that's all we have for today's news. Hope you guys enjoy this, and I'll see you guys tomorrow.